The SAA Pilots Association and the National Transport Movement Pilots Forum have embarked on an indefinite strike. This follows failed wage negotiations. Pilots initially wanted a 30% salary increase, but that has been reduced to 15.7%. SAA has offered increases of 8.4% backdated to April 2024. The airline says the offer has been benchmarked against international pilot salary adjustments. The unions have stated that they will do everything they can to minimize disruption and bring the negotiations to a fair and equitable conclusion as soon as possible. The strike comes just before schools countrywide officially close on Wednesday, with large numbers of South Africans having booked flights for the December holidays. A ruling made by the Gauteng Division of the High Court in Pretoria will make it difficult for government to approve the development of any new coal-fired power stations in the future. The landmark ruling reviewed and set aside the provision in the country's current integrated resource plan for 1,500 megawatts of new coal-fired generation capacity and two decisions aimed at implementing it. The ruling was based on the failure of the Minister and Energy Regulator NERSA to consider the effect of the anticipated new coal-fired power station on the environment. Nampak has entered into an empowerment transaction that will be implemented with a new private equity fund, Cambrian Capital Partners. The packaging firm says the transaction will take the business into its next chapter in a sustainable and responsible manner. Cambrian was founded by Thembinkosi Bonakele and Thembeka Ngwaitobi. The IDC has appointed a new CEO. It's named Mamukhoshi Lekete as its new head, but she's not set to start just yet. The board says Lekete, who has held various executive leadership roles in international financial institutions, multilateral development banks, and global economic bodies, needs to finalize engagements with her current employer, National Treasury, and thereafter details will be shared regarding her commencement date. Further afield, Bitcoin passed $100,000 for the first time, continuing a stellar rally for the cryptocurrency sparked by expectations of a more friendly regulatory environment under a Donald Trump administration. Here's more detailed in this package report.
Bitcoin has finally hit $100,000. The landmark was reached amid expectations of a friendlier US regulatory approach to cryptocurrencies under US President-elect Donald Trump. Investors are betting that his administration will unleash a boom era for the asset class. It caps a year in which the cryptocurrency's price has more than doubled. Bitcoin was also up about 45% in the 2 weeks since Trump was voted the next US president. A slew of pro-crypto lawmakers were also elected to Congress.
Hello, Bitcoiners. Thank you very much. Hello, it's good to be with you.
Trump embraced digital assets during his campaign.
If crypto is going to define the future, I want...
That included promising to make the United States the crypto capital of the planet. He's also promised to accumulate a national stockpile of Bitcoin. Trump has said he'll set up a crypto advisory council, and he and his sons also announced a new crypto business, World Liberty Financial, in September. Under President Joe Biden, the Securities and Exchange Commission and the Treasury have cracked down on crypto companies for allegedly violating securities and anti-money laundering laws. Bank regulators discourage lenders from dabbling in crypto, and Congress failed to pass legislation that would help promote mainstream adoption. Under Trump, a softer regulatory stance is expected, and crypto executives say the industry is now pushing for a range of measures. That includes potential executive orders on access to banking services, as well as crypto-friendly picks in a range of roles, including a new SEC chair.
And Britain has approved Vodafone's $19 billion merger with Hutchison's 3 UK to create the country's biggest mobile operator after the investment promises outweighed concerns about higher customer bills. Here's more insights in this report.
Britain approved a multi-billion-dollar mobile merger on Thursday. Vodafone and Hutchison's 3 UK were given permission to create the country's biggest mobile operator. Regulators had warned the deal could push up prices, but they accepted a pledge by the two companies to invest in 5G networks and offer protections for retail and wholesale customers. Britain's Competition and Markets Authority, or CMA, said they now believe the merger is likely to boost competition in the UK mobile sector. It added Vodafone and Three must agree to implement the proposed measures. The approval follows a demand by Prime Minister Keir Starmer for regulators to put economic growth at the front of their thinking. It also marks a major shift in the CMA's belief that 4 operators were needed to ensure competition and keep consumer bills low. Vodafone and Three have committed to spend $14 billion to build a better 5G network serving 50 million customers. Regulators believe the investment should drive competition between the 3 remaining networks. They also think it could eventually deliver a better service for customers. Vodafone will own 51% of the combined company, and it will have an option to buy the remainder after 3 years subject to certain conditions. Vodafone shares were up slightly in early trading.